Oh, I didn't see you guys there. I was just reading Poor Charlie's Almanac in preparation for today's Berkshire Hathaway annual meeting. Now, this is the first meeting since Charlie passed away, and that's sad because he was expected to be 100 years old at this meeting, which I was kind of excited about. So today I thought it'd be fun to record a little bonus video and react to some clips from the meeting. Now, this book, Poor Charlie's Almanac, is named after Poor Richard's Almanac, which was written by Benjamin Franklin. And they actually have Benjamin Franklin on the cover in the back there. Now, Charlie Munger never met Benjamin Franklin. In fact, he lived hundreds of years before him. However, Benjamin Franklin was still one of the models Charlie chose to learn from. Charlie had one of my favorite quotes saying that you should make friends with the dead. And when you're looking for heroes or models to learn from, you shouldn't limit yourself to the living. As he said, some of the best role models are dead. And Charlie has now joined that rank. Warren, though, is still with us at 93 years old, and he is still packing out stadiums today in Omaha, Nebraska. And I'm excited to tune in today. Warren and Charlie have both been big influences on me, whether it's about investing, business, or life. I know many years from now, long after they're dead, and I'm much older, I will still be referencing back to some of the lessons they have taught me. Reading old shareholder letters and listening back to old Berkshire Hathaway annual meetings. And that's because many of their principles are timeless. They have a fantastic fundamental understanding of the world, business, investing, etc. Also, this book is a great coffee table book. Get bored, open it up, and you have like a nugget of wisdom that you can take with your day. So anyway, I'm gonna go watch the Berkshire Hathaway annual meeting, and I'll cut back if there's any clips that I find interesting and want to react to and share my thoughts. See you then. All right, so I just started watching the meeting and they recorded a great montage video and had an ode to Charlie, and there was a massive standing ovation. All I'm gonna say is I'm glad I did not record my reaction live because I was a mess. Lots of tears over here. I don't do well at funerals usually either, so you should definitely go watch the video. I'm not sure how much I can really include in this. All I'll say is Warren is a better man than I. He did not shed a tear in that opening. If that was me, I would have been done up there. It would have been a disaster. I had to speak at my grandma's funeral recently, and I made sure that I had to go first because I'm not made to go last. So anyway, hopefully there's some more clips that are interesting, and I am not teary-eyed the next time you see me. See you later. So Warren started the meeting going over the earnings from the first quarter. They had a pretty great quarter overall. Q1 operating earnings came in at $11.2 billion, which is up from $8 billion in the prior year. That was mostly led by an increase in their insurance business, both in underwriting and investment income. Now, Warren mentioned specifically in that clip that you should not expect that to happen every single quarter this year, and it was mostly just due to unique conditions in this quarter where they had very low expenses and higher rates, allowing them to get better yields on their cash and their investment business. The BNSF Railroad, that was down slightly year over year, and Berkshire Hathaway Energy was up to $717 million. Warren also pointed out that he likes to look to operating earnings because this is the actual cash the business is getting, compared to net income, which is a just terrible statistic for a company like Berkshire Hathaway, where they own a massive portfolio of tradable securities, which are constantly going up and down in price. Net income uses GAAP accounting, so you have to factor in all the different values of the various businesses they own going up and down in the quarter. Even if they don't sell and realize any of those losses or gains, that's included in the net income number. So Warren, he always likes to point to operating earnings, which is the real cash the business is getting. So here you can see that Berkshire Hathaway is up to $182.3 billion in cash and U.S. Treasury bills. And old Warren, he just keeps laddering those Treasury bills, getting 5% on his money and is living life. And with all those operating earnings coming in every quarter, this cash pile just keeps growing and growing and growing. So they are at the point where they could make a massive investment if they see the opportunity. And if not, they'll just keep getting free money with these Treasury bills. All right, so I'm going to keep watching, and I believe Becky is about to just ask him about selling Apple in this quarter. Only some of it, but he did sell some, so I'll see what he has to say. So Becky just asked Warren about selling some of his Apple position, and he commented on it by, one, saying that it's likely by the end of the year that Apple will still be his largest position. And right now it's about 50% of the value of his public stock portfolio in Berkshire Hathaway. And he also just said that it's a business that they plan to hold for the long term. And Apple, along with American Express and Coca-Cola, will still be there when Greg Abel eventually takes over in a few years. And of course, you see this as a big story that he's selling Apple, but he's also trimmed his position previously. And Apple continues to buy back shares at a high rate. They just announced the biggest stock buyback program ever at $110 billion. And that's just going to increase his ownership stake even more. So their actual ownership in the company is still very high. So this is very interesting right here. Warren, he's still in this Apple part. And in relation to that question, he starts talking about taxes and how they're paying a 21% capital gains on their Apple position that they're selling. And he starts going on and on about taxes for a little bit. And he drops that he thinks that capital gains will go up in the future due to our current fiscal spending situation and the needs to raise tax revenue. So that is leading me to think that that could be one of the reasons that he is selling his Apple stake, some of it, because he has massive gains on that position. So locking in some of those gains at a lower tax rate this year compared to who knows in the following year if capital gains goes up. If you remember in episode 1 of my new weekly video series, I covered Biden's new tax proposal. And in that, for super high income and ultra wealthy, whatever they declared that level at, capital gains were supposed to be up to 44%. And they were also proposing a 25% tax on unrealized gains, which I think is insane. If you ask me, taxing unrealized gains is property theft and is equivalent to a wealth tax and probably unconstitutional in the United States. But that's just asking me. So that's making me wonder if that's part of the reason why Buffett is selling this. I'll listen more, get back to you. Now, I want to be clear here that Buffett is not saying that he's trying to avoid taxes necessarily. He's actually going on a tangent about how it's a good thing that they pay taxes, and he'll be welcome to pay more if tax rates do go up in the future. I've also heard him say in the past that the United States government is Berkshire Hathaway's largest shareholder, which is a really interesting way to think about business in the United States, where because of taxes, both capital gains and income taxes, corporate and personal, the government really owns a percentage of Berkshire Hathaway and all these other large corporations in the United States. And the government is their largest shareholder. So that's kind of just some food for thought, interesting way to think about capitalism in this moment. Warren just had an interesting point here about AI. Well, I mean, it was a pretty obvious point to anyone that's pretty technical and has been following this space. But I mean, he's 93. He was saying that in the near future, the largest industry coming out of AI may be the threat of scams. He used the example of deepfakes, where he saw a video that someone made of him saying something in his voice that he had never said before, and how you couldn't even tell that it wasn't him in any way. So he was saying that the scams that will come of this will be massive and ripple through society. And he's probably right. And we'll also, adjust to it. He said that if you are investing in scamming, this is the way to go. It's going to be the growth industry of all time. He also did point out that there is potential for immense good as well from AI. But right now, he doesn't know how it will play out. And, sadly, he probably won't live to see that future anyways. It will be my generation that really has to deal with the second, third, fourth, and fifth order consequences of AI, which will be interesting. So Warren just got asked another AI related question. The question was, what business in Berkshire Hathaway is the most at risk from AI? And Warren goes, Well, that's a very good question. And the problem is, I don't know anything about AI. And I got a big laugh with the crowd. And it's true. He's 93. He's never been a tech investor his whole life. He avoids it. He avoids things that aren't in his circle of competence, and he understands where there's a stable business model and a moat that he can see how it will progress in the future. And AI is basically, especially 95% of the businesses that are currently in that are completely unpredictable. So here was a interesting clip from it. Warren got a question about Tesla self-driving and how that would impact their insurance business at Geico, because auto insurance is a big part of that. The question premise basically was, if self-driving happens at scale and reduces the number of accidents in half, wouldn't that decrease Geico's automotive insurance premiums and they would make less? And Warren basically confirms that if that did happen, then yes, obviously they would make less on that insurance. But he added that he's not sure when and if that will happen and what the actual results of that will be, that system. And I guess more broadly, this is just a point of how dynamic the market is in general and how one innovation like self-driving cars would have downstream effects on many different industries, and Geico would just be one of them. Here's another interesting clip from the annual meeting. Warren was asked about who will be making decisions on his public stock portfolio in Berkshire once he's gone. And his answer was partially that he doesn't know because that decision will be made between his investment managers, Ted and Todd, and Greg, the future CEO. But then he continued on saying that he hopes Greg would make those decisions, but it will be up to him. And he trusts him because he understands business at a very fundamental level. And he's seen that through his operations at Berkshire Hathaway Energy and running that business. And Buffett points out that if you understand business, then you do understand common stocks and public equities and how to value them from the standpoint of stocks are just a piece of a business. And this is something I drive home all the time on the channel. Stocks aren't just a ticker that goes up and down, and they're a piece of a business, an ownership stake in a business. Buffett also brought up that at the scale of Berkshire, it's very important to be able to weigh the decisions between public equities and buying businesses outright as well. They have $182 billion cash on hand. An acquisition for them is gigantic. They're going elephant hunting. That is not an amount of money that you can just casually trade. You have to really think and know the businesses you are buying. Warren just gave a very simple piece of advice that I think would fit most people, in that you should find the job you would like even if you didn't need a job. And in a way, that's what I've been able to do with YouTube and dividenddata.com. I just get to build and share things I'm interested about and that I would do in my free time anyways. That's really the best combination when work a lot of the time doesn't even feel like work. Now, of course, you have to do things and there's busy steps in every process, even if you love it. But that's the key. If it's something you would do in your free time anyways, always the best way to start. All right, guys. Well, I hope you enjoyed this bonus video going over the Berkshire Hathaway annual meeting. I just had a little bit of fun and made these Buffett Munger 2024 hats. In an age where we're complaining about the age of our presidential candidates and politicians, it's awfully funny to imagine a 93-year-old running with a dead man as his vice president. So yeah, you can get a hat, stickers, magnet, pins, a hoodie. Just thought it was fun. I made it mostly because I wanted it, so I'm going to buy some for myself, and I thought I'd make it available for you guys. This is available at shop.dividenddata.com. Link will be in the description and tagged on YouTube. Also, I'll be adding it to dividenddata.com and the website and everything. I also had a fun, more Dividend Data merch related idea that you may see next week because I already ordered one and I haven't released it yet. So that'll be exciting. And at the end screen of this video, I'm going to link some Charlie Munger videos I had made in the past. One, which is a tribute I made when he died, which was a little bit of an emotional video. And the other one, which are his funniest moments, because Charlie was a funny guy. And I also have a big playlist of Warren Buffett videos. My favorite is why Warren Buffett loves dividend paying stocks. That goes into a bunch of his investing philosophies, specifically around buying cash flowing assets. And it walks through the example of See's Candy and how Munger influenced him to start buying quality assets at a fair price compared to dirt cheap assets. Anyway, thank you guys for watching, and I'll see you Friday for next week's episode.